Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys. All right, everybody, welcome back. How we doing? Hope you're trading safe here. And I do mean trading safe. These markets this year have been crazy. Got stocks pretty much flat here. Nasdaq's down just a little bit today. S&P's flat. Dow Jones is actually in the green. Just real quick, if you guys could let me know if you can hear me okay, if you can see me okay, if everything's okay. Whenever I stream from home, I get a little bit more nervous because I don't have the full high-speed internet that we have at the office and stuff like that. So just let me know that we are okay, and then we can go from there. 5 stars. Good to know. Thank you. Okay, so let's see. Where are we at? I've got a couple things. I was mapping out my video for the day just before I jumped on the stream here today. Couple things that I wanted to discuss. One of the reasons that I feel pretty good about staying bullish on this market is a key confirmation signal that I'm going to be discussing. You guys are getting the behind the scenes look at what I'm going to be filming today for the channel. This is what, a lot of the raw stuff, the raw preparatory work that I do happens in the live stream. If you watch the videos, if you're actually, can I just ask you guys in the chat? I'm curious about this. Do you typically watch just my live streams? Do you typically watch just my videos? Or do you typically watch both? I'm just curious because in the analytics, I can see that the majority of the overall viewership on my channel is actually on the videos. But you guys know we have a soft place in our hearts for the live streams here. I love doing live streams. They're also kind of my prep work. Like during the live streams, I'm doing a lot of research, going through a lot of stuff. Okay, everybody's saying both. Okay, cool. Yeah, so you guys are the real ones. If you're watching the live streams, you're part of we're getting our hands dirty, getting prepped, and then we revise it all and put it in the videos. But yeah, so when I look at this, here's what's on the docket for today's video, basically. One of the reasons I feel really good about staying bullish on indices specifically right now is actually what we see occurring in the put to call ratio and in the VIX. Let me show you the research that I was doing this morning. So if you notice, when the VIX and the put to call ratio started to peak, right? Okay, another question for you, because thank you guys for the feedback. I binge watch your videos. I'm curious, when you watch my content, do you go more for the market commentary day-to-day stuff, like the streams and the everyday analysis videos, or do you also watch like the fundamental how-tos? Do you watch my how-to videos mostly, or do you watch my daily uploads, like the analysis videos, or do you watch both? Again, I'm just curious, trying to look. Part of my New Year's resolution this year is to become a better YouTuber. I'm trying to make my content the best it can possibly be, just like every other YouTuber. But it's a grind, man, trying to understand how to be a good content creator. I mean, I think I've come a long way, don't get me wrong, but still, I would love to expand my reach on YouTube and hopefully impact more traders than I'm currently doing. So I'm trying to learn. So thank you guys for the stuff. Okay, so put to call ratio, right? This is what I wanted to get into today. One of the reasons that I like the concept of staying bullish on markets and going against the crowd here was because everybody got scared. We've talked about this 1,700 times, but the follow through to the downside here has actually been kind of a leading indicator. So when the put to call ratio topped out, right? If you know, this was a huge bullish kind of signal to me and to many who took advantage of the downside in stocks, right? Big sell off, everybody got scared, everybody bought puts. And that, unfortunately, is a painful lesson that traders learn over and over in the options market. They buy puts when everybody else is buying them, when the market's going down, because they think it's easy money, and then they get smoked when the market, jumps back up. So what is making me really content with staying bullish, ready, is that the put to call ratio has come back to a normal range. We're much more neutral sentiment now. We're not everybody is bullish, not everybody is bearish, right? We're somewhere in the middle. That I'm okay with. But what I also love is take a look at this. So the VIX has cratered almost back down to pre-tariff sell-off levels. But the stock market, you ready? The stock market has only just started to really bounce. So what I mean to show you with this is that the VIX has led this bounce. What I mean by that is it topped out. You guys check this out. This is really cool stuff. The VIX topped out on the 10th of March. The put to call ratio right at the 13th of March. Let's go look at that signal. How good was the put to call ratio at calling the top? I'm sorry, calling the bottom. What do we say, March 13th? This is March 13th. Okay, so obviously there's a little bit of hindsight there, because let me show you what I mean. Let me deconstruct my own. You might have just said to yourself audibly out loud as you watch this, you might say, oh my gosh, the put to call ratio. Well, it's not magic, because technically it also was calling bottoms over here for a little while. So let's not get too ahead of ourselves. But we had this ginormous spike, the capitulation sell day, right at the bottom of the move. So on the 13th of March, the put to call ratio went parabolic, right? That was a day where I was obnoxious. I was obnoxiously pointing out on my channel that, look, the put to call ratio is going massively skewed. The risk to reward on this market got too good. And I bought a bunch of Tesla shares right around this area. I didn't call the bottom perfectly, but I accumulated shares, and then I added Tesla, which ended up being so far just behind gold, my top trade of the year, Tesla long shares. So anyways, my point that I'm trying to get at with this is that you had this big bounce up. When we look at the put to call ratio, we want to study volatility. Now, you might say, Nick, I trade euro dollar. What does this have to do with me? Or I trade gold. What does this have to do with me? And the answer is everything. Because what many traders miss is that they think that they can kind of silo themselves into focusing on just one thing. And I suppose that you totally can do that. But watch anybody that comes on this show who's a fundamentalist. And what you'll note is that they will have comments on everything, even if they don't trade everything, because it's like this. The market is a web. It's a system, right? So even if you don't trade the S&P 500, watching the S&P 500 and seeing what it's doing is a risk on or risk off signal to the rest of the market. It carries over to currencies. It certainly carries over to gold and to bonds. If everybody's scared about something, gold typically does well. You can't always see everything from just looking at one chart. And if you're a fundamentalist, you know this quite well. You know, as a fundamentalist, that you want to study markets as a whole, not markets in isolation, right? You can't understand. Imagine if you're, in today's world, you can't fully understand economics by only looking at one economy. We live in a globalized world. The markets are the same way. What's happening in Europe impacts Japan. What happens in Japan impacts US. it's all connected, right? So same thing with markets. So we want to understand these concepts, even if they don't directly impact, or they don't seem to be directly impactful to our specific trades. They absolutely do. Understanding the VIX is universally something that I think is important. And I accidentally offended a bunch of Forex traders recently, not on purpose, by talking like people had never heard of the VIX before. But I'm only speaking from experience, because when I started out as a Forex trader, I really didn't know much about the VIX. You don't learn about the VIX as a Forex trader that much, right? You hear about the dollar, you look at DXY, right? And a lot of equities traders or indices traders aren't paying close enough attention to the dollar index. A lot of currency traders are not paying close enough attention to the VIX. It's all connected. It's all important. Don't skip out on analysis just because you don't trade something, right? I see people make that mistake day in, day out. So just think about this, right? So this stock market bounce, does it have more room? In my opinion, the answer is yes. The VIX is telling us that volatility is still falling, right? So the VIX is down big. If you bought puts, again, really tough time, because if you bought puts, the expected move of the market has completely vacuumed out volatility. We've seen a huge volume fall, or a volatility crush is what they call this. That's telling you that the market is chilling out. It's cooling off quite a bit. And so when this cools off, take that with you to everything else that you trade. Could that also have been why we've seen gold not necessarily come down a lot, but at least cool off, right? We have not seen gold ripping higher because high volatility typically favors gold, right? Look at March 13th. Again, it's all connected. We just said on March 13th, you had a huge capitulation sell day in the stock market as volatility skyrocketed. Look what happened to gold on that same day. Gold jumped as people rushed for safe haven assets. See how it works? It's all connected. So don't again, there's people who love to cross their arms and say, oh, I only trade gold, so don't show me any other charts. I just want to see gold. And I'm telling you, you're missing out on the story that is being told by the markets right in front of you because you only want to look at one chart. It's all important. No chart is superior to the others. All of them are connected. Being a trader, being a fundamentalist specifically means understanding the story that the market is telling you in all areas and on all assets, right? So again, put to call ratio has normalized a lot. There's a good chance, unless something new hits the market's, headlines, that we're settling down here. That market moves are maybe not going to be so violent as they have been in recent times. NASDAQ's pulling back here a little bit. I would love this thing to give me an entry point. I would love to see a couple days down on the NASDAQ to give me an opportunity to get long. I am still very interested in buys on the NASDAQ. I'm looking for that trade setup myself, specifically on the 4-hour chart. I love the idea of getting a pullback into this area. Like if we get something like this today, or maybe not today, but maybe the rest of this week, if we get a little bit of a pullback, to me, this would be an excellent opportunity to look to get long, specifically a gap open, right? So we had the big gap up over the weekend. Talked about this on my Monday video. If we fill that or don't fill that gap, but if we come back and retest this area or even fill that gap, this area to me is an area where I want to accumulate longs. I already have a good bit of long positions. So if the market keeps going, then excellent. But I would love to get filled on the remainder of my positioning that I want to on a pullback. So I'm watching the NASDAQ, definitely very interested. When I'm talking about gold, same story. Would love to see a bigger pullback on gold here. Interested in longs, but really specifically, I'm interested in the daily chart level that I've been talking about here, this 2950 area of support. So if I draw a fib retracement from swing low to swing high, that puts me at about a 50% retracement of this recent move. I'm a little cautious on gold at these levels. I'll tell you why. Again, you ready? Here's why it's all connected. The VIX dropping and volatility kind of cooling off right now tells me that not certainly, but there's a higher probability that we may not make a kind of runaway move on gold at this moment. Now, if something changes, obviously something changes. Like if something freaks the market out again, gold might just go higher as people rush to safety. But I think what might be an appropriate patient play for me is I took profits on my gold move here. Not the best timing to exit the trade, but I went long here. I closed out here for a profit. And now what I'm looking for is an opportunity to get back into the trade. But I think that this thing is I want to be careful how I say this because newbies might hear it wrong. I am not saying that I think gold is going down. I'm saying I think that it's due to pull back. And there is a difference. So let me break that out for you. So I like gold longs quite a bit. We have Edge Finder confirmation. If we take a look at the top setups page on the Edge Finder, I believe that, yep, gold is our #1 pick on the Edge Finder right now. By the way, is everybody trying out the Edge Finder this week? It's free access to everybody. Our software tool is completely free to use right now. If you are not using the Edge Finder, quick public service announcement. Step 1, join the Telegram channel. That's where we're dropping the information. And step 2, in the Telegram channel, you ready? Boom, got dropped this morning. Get access to the Edge Finder completely free if you're in our Telegram channel. Step 1, join the Telegram. The link has just been dropped in the chat, the live stream chat. It can also be found in the description down below if you're watching this recording at a later point. Step 2, go to your Telegram, click right here, this message. That will be where you can apply for free access to the Edge Finder until the end of this week. That is available, like I said, ending soon. Okay, let me keep going. So I like this concept, right? Gold longs, but I've got to be patient because volatility is drying up a little bit. I think we're cooling off. I think that the tariff stuff, in my opinion, has reached an apex. We'll see, if I'm correct about that. But if I am correct about that and tariff worries are kind of slowly dropping down, then gold probably has room to have a healthy pullback. Now, again, let me be very, very clear how I say this. I am not saying, oh, I think it's going to pull back and I'm going to short right here and I'm going to bet that this market is going to go down. I'm not doing any of that. None of that. We're in a strong upward trend. The fundamentals still within my system here favor gold longs. So if something in the Edge Finder has a straight up bullish or bearish reading, that means I'm not taking a contrarian trade to that. For me personally, you do what you want. But for me, the Edge Finder says very bullish. That means sentiment, technical, and economic data is generally leaning bullish on this particular chart, gold. So I am absolutely not going to try and get cute and try and get fancy and trade the pullback. I know a lot of traders will do that. If you have success doing it, by all means. But to me, that was never a trade that made me good money, right? You might get lucky. You might be able to catch a little bit of a sell pullback. Oh, I got away with it. But most of the time, if fundamentals are really killing it, like if there's a really bullish fundamental story, you tell me how easy it is to try and catch the pullback on a move like this, right? That's a fundamental move, right? With the dollar weakness, with expectations that the global central banks are going to continue to cut interest rates, flooding liquidity into the world, that makes prices of gold mostly float up. That's why we pay attention to fundamentals. To me, to try and trade the pullback, try and get cute about that. Again, I've never had a lot of success trying that approach in the markets. I prefer take me to a daily chart, tell me about the fundamentals, and then I'll wait patiently for pullbacks. But I'm trading in the direction of the dominant move. I'm not going to try and catch the offset move because it's incredibly hard to time. And look, you ready for this? This is something you just have to, someone did this in their video one time and it resonated with me massively. If you're a buyer in this market versus a seller, let's talk about how hard or easy it is to make money. If you're a seller, you had this move. That was great. Maybe this move, maybe this move, maybe this move. If you're a buyer, if you are a buyer of this chart, you made huge money here. You made huge money here, huge money here. And what fascinates me, guys, is that retail, again, this is not me guessing. This is something we've observed time and time again by market sentiment. We can see this data. So frequently during these moves, retail is short, and during these moves, retail's buying in, or they're finally closing out for even hoping to try and get break even, but oftentimes they're blowing their accounts trying to short these kinds of moves. So you tell me, you think about this before you get super contrarian trying to bet against gold. I've got people on Twitter who have been tagging me, off and on for months, even maybe a year plus, telling me about how gold is going to crash and all this and that. And like, maybe it does eventually, maybe it does, but I don't try and make those kind of huge career calls very often, right? So trying to tell me, oh, gold is going to crash massively. Maybe it does, but I've heard it 7,000 times in the last few years. And I've just been staying long because the fundamentals make sense. So think about it. Where's the easy money in this chart? Is it getting short? No, that's the hard money. That's the, you got to fight every nickel and dime to make any money trying to short gold in the last few years, because the fundamentals have been so strong. The fundamentals have been so strong. Central banks are trying to cut rates. Inflation's been cooling off. Central banks are buying gold to get away from the dollar, kind of global reserve stuff. There's a strong story for this, right? So we stay with the dominant trends in markets. That's where the quote unquote, there's no such thing as easy money. But if there is, the closest thing to quote unquote easy money to me is riding fundamental trends and not trying to fight them, not trying to be a hero, not trying to call tops, not trying to call bottoms. Okay. I hope that makes sense, but really, really important stuff. Gold is still saying bullish. So I'm not looking to short gold, but I'm looking to wait for a pullback. If I can get that, I think my risk to reward for long setups looks really worth it. Hopefully that makes sense. I know there's a lot of gold traders in the room, so that was a pretty comprehensive breakdown on gold today. Edgefinder is an awesome tool. Thanks, Nick, for you and your team for the access. You're very welcome. Yeah, no, again, I mentioned this earlier. Just a reminder, we do this very, very rarely. We're currently doing a free week access for everybody who is watching this live stream right now. If you don't have the Edgefinder, it's free to use this week. Don't miss this chance. We do this very rarely. So if you'd like to play around with the Edgefinder, get access to all of our COT data, our top setups algorithm, the different scanners, market data, economic data, seasonality tools, all of this is available for free this week. This is, like I said, not something that we do for very often or for very long, but until the end of the week, play around with the Edgefinder, see if it's right for you. All I ask, leave us some feedback. And if you really like it, consider supporting our work by purchasing a copy at the end of the week. Okay. Yes, you can. Here's how you do it. Number one, join the free Telegram channel that just got dropped in the chat or in the description of this video. Step two, click this link and apply to get access. The link was just dropped 8:55 a.m. That was just under an hour ago. Okay. Let's see what else. NASDAQ's also a bullish reading. Like I said, I've been looking for that pullback on NASDAQ. I am also already long silver. Silver, that trade is doing okay. Also, check this out. This is our new trade tracker that we're working on too. We've been building some pretty cool tools here. This will make it so that interactively members in our Discord can pull up this page and you can see it's actually updating automatically every 15 minutes. So I have a silver long position. I have several stock positions open right now that I opened up recently. I mean, I bought a whole bunch of stocks the last few weeks. I've been talking about that in my videos. Silver longs, euro dollar longs, bunch of stocks that I have open, and looking to add, like I said, a NASDAQ position. So I'm quite busy on the trading side, but you can see the P&L, or not the P&L, but the change of the position. So I have like Tesla. Oh my gosh, Tesla is absolutely ripping. Elon Musk, please don't say anything crazy on TV and just sell cars and build cool technology. Go back to rockets and cars and make the stock go up 1,000,000%. Anyways, here's the silver trade. So I went long a couple days back. Very little drawdown on this one. Pretty much immediately started going into profit. However, recently I also tried a Bitcoin long, which did not work at all. Stopped out on that. I'm looking for another chance to try Bitcoin longs. We're getting bullish readings on the Edgefinder. So I would like to see this one break with a little bit more decision here. If you start to see some technical, kind of breaks, retests, breaks, I may be interested in getting some Bitcoin longs. Okay, guys, up next, we have Forex James taking over the stream. You guys know him, you love him. He's a regular contributor to the A1 Trading Show. Like I said, if you don't have the Edgefinder free week access, all the information's in our Telegram channel. And what we're going to do now is we're going to reset the stream, get James set up. I'll stick around with them just for 2 or 3 minutes, and then I got to hop off for a podcast. But we'll be right back with Forex James just after this. Stay tuned. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, we're back with Forex James. How's it going, man?
Hey, yeah, I'm good, Nick. How are you?
I am good, and just wanted to check in with you, see what's going on in Forex James land. What are you watching right now?
Portfolio is maxed out at the moment, so we have got quite a few positions. So we've got dollar yen short, which isn't playing out very nicely at the moment, which is unfortunate, but it is what it is. We've got a 1-to-1 trade with the S&P 500. Nice. So what I mean by that is if the S&P goes up 1%, we're up 1%. We are short euro dollar. We actually caught the very, very tippy top, which was really nice. Silver long, I think you're silver long as well.
Mm-hmm.
Australian dollar, New Zealand short, which is currently around entry. We've got a Google long. Euro Swiss, we took long as well yesterday. And we've got a NASDAQ long, which looks like it's about to get stopped out, actually. But yeah, that's it, really.
So, James, I was talking earlier just about this concept of markets being kind of all interconnected. You're making a great point for me with just the diversity in which what you trade that you just went through, right? You've got some individual stocks, you've got indices, you've got Forex pairs, you've got commodities. I mean, you literally just have a little bit of everything. I'm the same way, right? I have currency trades and metals trades and stock trades and looking for index trades. So talk to me just for a little bit about that concept. You kind of have a similar approach where you are focused mostly on the macro story overall and then taking it to individual charts, right?
Yes. Yeah, exactly. So with correlation in terms of being, as you said earlier, the markets and economies are essentially a web. You, as a trader, you've got to account for that in terms of, correlation. So what you don't want to do is buy gold and silver both at 5% risk just because they're both going up. Obviously, you might want to buy one at 1 or 2% risk. That makes complete sense. Now, if you're benefiting from whether it be risk off sentiment or whatever is the reason you're going into that market. So I've hedged it slightly with the S&P. So obviously we were looking at commodities or precious metals quite heavily when we saw tariffs as a big concern, and we had that huge spike in the VIX, or the spike in the VIX. We saw risk off. That's when we saw the S&P, the NASDAQ fall. We saw gold do quite well and silver do very well. So the approach to that was, okay, I want to buy gold, I want to buy silver, but the risk sentiment isn't quite there. The VIX is now falling. The S&P dropped 10%, which is a healthy correction. So I'm also going to buy the S&P. So if risk, for some reason, if we see large profit taken on precious metals, we see the VIX drop even lower. The S&P is likely to continue doing well. So I'm doing fine off that one. Vice versa. If risk completely goes back to complete risk off, the VIX spikes, I'm okay in silver. The S&P likely will hit stops.
Yeah.
But yeah, the portfolio at the moment is set up in a way, because to be perfectly honest with you, I'm very mixed on a lot of currencies, and I don't really have much of a set direction on a lot of things. So I'm happily diversified, taking 1-to-1s, 1-to-1.5s here and there, and that's it. I'm done.
Yeah, it's so interesting because what you essentially are doing, and I do the same, is we focus on the macro. We focus on the risk profile of markets that we're looking at, like the risk to reward to certain things. We also look at market sentiment. And when you start to string all that together, what you realize is that what I study and what I focus on is not necessarily gold or the NASDAQ or euro US dollar. That's really the final product that we're going to use to express our analysis. So what I mean by that is, like, you mentioned it well there. Like, let's say we're looking at the VIX, or we're looking at the put to call skew, and we see everybody is super nervous or everybody is super euphoric. Again, we haven't thought about a symbol yet. We'll go to the symbol at the end of our analysis, right? We look at sentiment, we look at institutional positioning, we look at seasonality, we look at economic data for the US, for the European Union, all these different things, and then we choose a symbol. Like, that's the thing. I think so many traders do the exact opposite, where they're like, no, I'm set on trading euro dollar every day because I like trading euro dollar. And there's nothing wrong with that per se, if that works for you. But if you are somebody who is a fundamentalist, if you're somebody who looks at market sentiment, you track COT data, you track put to call stuff, you look at retail positioning, and you say, okay, here's what I'm seeing. Now I want to express my analysis through the euro dollar, or I want to express my analysis through gold or the NASDAQ. What happens is you start being more fluid in what you trade, because you're not necessarily trading NASDAQ, you're trading your bias that you found through the data. And maybe it just so happens that NASDAQ takes the lead, right? So it's a really interesting reversal of traditional thought in trading, which is, oh, I want to trade one chart, I just want to trade gold, or I just want to trade euro. Again, nothing wrong with that. But for people who are true fundamentalists, all the fundamentalists that I know, they don't trade, none of them trade one thing. They trade like a million things. Like Chris Pulver, yourself, me, we trade, Frank. I mean, we all trade many different things. We're fluid in what we trade. We focus, however, on the macro and sentiment.
Yeah, absolutely. And I think one of the easiest things about economics is when you start on it, it looks very intimidating. You've got words that you would never really hear outside economics or finance.
Yeah.
And someone new, it's a crazy world. But when you start the basics and you understand, okay, well, inflation is this. If inflation's high, the central bank's likely going to hike rates, or it pushes them towards hiking.
Yes.
Or if it's low, maybe they'll hold or cut. And then you start putting these pieces together, but those things don't change. So obviously the actual data will change, but the indicator doesn't change. So all you've got to do is say, okay, well, inflation's gone up or inflation's gone down. And you already have that jigsaw in your head of, okay, inflation's gone up, so I know the central bank might do this. What does the labor market look like?
Yeah.
And the analysis process doesn't change, and it becomes actually very, very easy and straightforward after you get used to the process.
Well, it's a never-ending rabbit hole, James, because actually you said it better there. Ultimately, what we're doing is we're trying to play the Fed, right? Or we're trying to play the ECB. That's ultimately, as you've said, that's the way to really phrase it, is we're trying to gauge money flow through the largest money flow entity, which is the Fed, the ECB, the Bank of England, et cetera. We're looking at the same stats that they're looking at. So I was mentioning the macro, right? Looking at NFP, looking at jobs data, unemployment rate, inflation. That's what they look at too. So we're going all the way through this whole system. It's all connected. That's the cool thing about markets, is when you start to appreciate them for what they are, they're this beautiful, kind of network of, it's like a spider web of different stuff. The cool thing is that we say, okay, we're trying to make a call as to what is likely what's the Fed going to do. If I told you that there's a very strong probability that the Fed is going to aggressively cut interest rates for the rest of the year, my guess is that fundamentalists in the audience, and of course, James, yourself, like, we could say, okay, so if we know the Fed is likely to cut interest rates, we probably want to select a handful of really strong stocks. We probably want to be long metals. We probably want to be long stocks. We probably don't want to be long the dollar, right? We want to be bearish the dollar. So that's how we can take a bias, an analysis from the macro and from where we think the Fed is going to move next, and we can extrapolate that across all the different charts. They all move based on the same key fundamental factors.
Yeah, absolutely. I think fundamentals is probably the hardest thing to start. Yeah. But it really is the easiest way to trade. When I say easy, I don't mean in terms of time. I just mean, again, once you get in the flow, it's kind of the same thing over and over.
Once you get it, you can't look at the market. That's the problem. Here, everybody who's listening, if you're like, maybe I'm going to dive into this fundamentals thing. I hear these guys talking about it. They're talking about fundamentals, talking about trying to figure out the Fed. What do all these data points really mean? Like, are they just talking about these for fun? It sounds like a whole bunch of finance major, economic jargon. And I'm not a finance major. James, are you a finance major?
Nope.
Nope. So
Definitely
we're
not.
not finance majors. We've just come to this conclusion. Oh, this is the stuff that moves the market. But the problem is, here's my warning to everybody who's watching this stream. If you go down the rabbit hole of fundamentals, here's what's going to happen to you. You'll never be able to go back. Because what happens is once you look at the fundamentals, once you understand what all these metrics are telling you about the economy, and you watch how the market immediately responds and reacts to those data points coming in, your framework for the markets becomes so much more enlightened. You understand what's moving it. And the problem is you can never go back to fair value gaps ever again.
Yeah, I was about to say that actually. I think it actually, from the economic side, it really it helps simplify the technicals, because you actually you end up at a point where you don't care about what's happening on the 15-minute time frame. You're looking at, okay, the weekly's at a support, I'm just going to buy this, because obviously the fundamental bias is strong enough to do that. So it really does streamline everything, actually.
Yeah. Well, and not to, I take back my hard, it's not necessarily fair value gaps. It's all sorts of technical things, right? Moving average crossovers. What the point that I'm trying to make, and I think James, you're on the same page with this, is once you understand the fundamentals, the macro, like once you start piecing it together and you're like, oh, so that's why the Fed's going to cut. And when they cut, it's going to do this. And all these charts are going to move this way. And then when it happens in front of your eyes, you're like, okay, that's the weather, right? The weather in this market is fundamentals. It rain, shine, whatever it is, cold weather, hot weather, that's the fundamentals in the market. It sets the tone for everything else. So just something to think about. But James, I'm gonna hop off. I gotta run for a podcast, but you got the show for a little bit. Everybody who's watching, I highly recommend you take 1 second out of your day. We're going to drop the link to James's YouTube channel. He does bonus live streams. And again, he is a fellow fundamentalist junkie like myself. So if you're looking for more content and you like the accent that he has better than my, US accent, I don't know, maybe James is more your style. So anyways, check him out. I'm just kidding. Subscribe to both of us and watch all of our content. We got great stuff for you. And it's all free. So there's James's YouTube channel. James, you got it from here, man. Thanks for taking over the show.
Cool. Thanks, Nick. See you later.
See ya.
So, how is everyone doing? It's Wednesday. We're halfway through the week. Only a couple more days, and then we can breathe. It's the weekend, and we can get drunk and relax. I'm joking. We don't drink. We keep a clear mind. I'm seeing a lot of comments about the Edge Finder. I'm glad you guys are using it. It's a very powerful tool. It is definitely worth having a go at. Even if you can't afford it, the free trial is definitely worth taking up. So yeah, I mean, I went through what I'm in with Nick, but just to quickly recap, I am short dollar yen. So the idea behind dollar yen short was, I mean, in hindsight, not the best play, but you can always say that about hindsight. The dollar had obviously dropped 4%. Previously, it also dropped even further. So the idea was essentially just to capitalize on the dollar bearishness. But it seems like the dollar is pulling back now. I kind of expected that. I think I mentioned it a few times, but I was still willing to keep my short on the table. So the dollar was sideways moving. It managed to break out to the upside. So now I'm looking at the 50% retracement, maybe even a full retracement of this, medium to long term. So for the next, I'd say for the next year, so the rest of 2025, I would say dollar bearishness. Now, am I going to try and trade that idea? Probably not, because I'm not someone that likes to sit and say the dollar's going to crash or the dollar's going to, be the worst performer. The dollar is a very, very stable currency. Overall, it has a very stable economy, regardless of fluctuations short term. So I will capitalize on the momentum if I see it. But again, I'm not going to be placing any position trades trying to short the dollar just yet. The yen, I'm still bullish on the yen. So I've been on this train pretty much since the start of the year. I've been very bullish on the yen. Now, this move to the upside was quite profitable. However, it's now sinking a little bit. We're seeing a bit of a change in the short-term trend, and that's coming off the back of the dovish BOJ, so the Bank of Japan. They essentially said they're not in a rush to hike rates, which isn't a surprise. The Bank of Japan is known for moving very, very slowly, but their inflation rate is way above target at 4%. And as I was saying earlier, if we have high inflation, there's only so long, especially when it's double their targets at 4%. There's only so long they can hold off hiking rates. They are going, well, I'm not going to say they are. I would expect them to hike rates at some point this year. Well, you know, when it will come, I don't know. We'll see. But yeah, still on the yen bullish train long term. But again, you know, when I was saying I'm bullish, I was talking 12 to 18 months, nothing too short term. So this trade might not work out, but the idea, I would say, is still completely fine, maybe for in a couple of months' time. The S&P. Now, as I was saying earlier to Nick, any experienced trader will kind of have this idea anyway. A 10% drop on the S&P generally is a signal to buy. So the running rule for the S&P, specifically the S&P, is a 10% drop with no real driver, so such as a recession, a war, COVID, without something that's really detrimental, it's normally a signal to start looking to buy. So I'm quite happy to buy the S&P. If it stopped out, fine. I'll look for a lower price. I am a big fan of just buying indices, and I will continue to do that. You know, risk is managed. It's all completely fine. Euro dollar. I'm actually really neutral on euro dollar. I don't have a directional bias in terms of bullish or bearish. The only reason I'm short is because it was essentially a mean reversion trade. The market was very extended, and generally candles like this or moves like this, when we have aggressive, aggressive, impulsive candles, whatever you want to call it, normally do get corrected. It can take a day, it could take a week, it could take a month. I don't, you know, whatever. So I was trying to time that, and we've managed to get it pretty much spot on. So again, there's not really a fundamental bias behind this trade. It was again just a mean reversion. Silver is great. I love the silver idea. So we've still got industrial demand. We've still got the expectation for the Fed to cut rates later this year. And metals are still in high demand. So I'm happy to continue buying silver. This was a very simple play, buying off the fib. Also buying off this 200 moving average. The RSI was oversold. So very straightforward, it's very simple. Aussie New Zealand, to be honest, was more of a momentum trade. There's a couple of economic factors, but I'll be honest, it was essentially just trend following. We've also got, I think it's Danske Research that's got a much larger trade short. It's more of a position trade to the short side in Aussie New Zealand. Google wasn't my trade; it was by one of my colleagues. So to be honest, can't tell you anything about Google. I don't trade stocks. Excuse me. Euro Swiss, I still really like Euro Swiss to the long side. So the euro is stable as far as I'm concerned. I'm not necessarily bullish. I'm not really bearish on the euro. So we've still got the German fiscal stimulus that is not really a huge factor at this point, but it is still a support for price for the euro price. We've got the Swiss. Or the Swiss National Bank that just cut rates by 25 basis points. So we're getting paid to hold this to the upside with positive swaps. And it is expected the Swiss National Bank are going to continue to cut rates for this year anyway. And the Nasdaq is the same play as the S&P, which actually just got stopped out. So that's a bit unfortunate. Anyway, let me read the chat. I just sort of quick fired through that. Serge, long time no see. I know. Still looking at US oil, get to 70.5. I don't know about oil. I'm still a bit conflicted in terms of where oil is going to go. I've got no real idea, to be perfectly honest with you. Yeah, no, not sure. Is this a pullback? Are we going to see price come lower? Are we going to break past support? Maybe. I don't know. To be honest with you, I've got no direction, no clear bias on oil. Yeah, NQ. So the idea is essentially to possibly see the gap filled, then maybe take another long. And Kit, did you join the stream just to talk rubbish about everyone that comes on the stream? What's your goal here, my friend? Is my question to you. Who is looking for Bitcoin sells? Not me. I don't trade crypto actively anyway. Swiss yen. Yeah, I still like the narrative of Swiss yen. As I was saying earlier, I think the short idea is still in play. This has now become a carry trade as well, because as I said, the Swiss National Bank cut their rate, so their rate is now at 0.25. The Bank of Japan's rates are at 0.5, so you will be getting paid to short. But with the yen not being able to hold its strength at the moment, I'm not really interested in going short just yet. The daily looks great. Actually, we've just had this moving average cross. We're testing this 200 daily moving average, so it could play out. But yeah, I'm just not quite certain yet. Let's just have a look at the Swiss. Yeah, it's not really doing too much, to be honest. I think I would need to see the Swiss. Obviously, this is a Swiss index. I'd need to see it start breaking these lows on a technical aspect and start trending lower. Then maybe I'd be interested. But yeah, just for now, it seems a bit iffy, especially with the yen losing its value and not being able to sustain much of an uptrend. Gold. Yeah, so gold's in the same idea as silver, really. I would really like to go long, but it's just a bit too high for me to be interested in buying right now. I'd need to see some sort of pullback. And I think Nick mentioned this earlier, actually, sort of around this 50% retracement level. So in between sort of this, excuse me, in between this area, I think would be a great place to buy. But yeah, right now, there's nothing to do on gold in terms of swing trades anyway. This is a problem I'm having at the moment with the markets. There's not that much going on. A lot of the markets are either, well, they're pretty extended, really. So if you're not already in positions, it's quite hard, really, to gauge where they're going. Oh, sorry, where to trade them from is what I meant to say. Look at DAX. Yep. Yeah, so I was long DAX. We took a long position. It was roughly around here, but I closed it for break even just because I didn't see the momentum I wanted to see. But the setup is still valid. So the fib level is still holding up. The trend is still bullish. This level of support seems to be doing its job. So if we can see another rejection of this level, I think I would retry and go for another long into new all-time highs, possibly even have a take profit at the fib extension and sort of just see how it goes. But yeah, I just need to see if we can get that rejection because at the moment, it's just sideways. There's nothing for me to do here at the moment. I think I said at the moment about 3-4 times. My bad. AUD CAD. So we had CPI come in this morning for the Australian dollar and for the pound. Both came in light. So the idea of buying the Aussie, buying the pound is not ideal for me right now. So yeah, actually, this looks okay. So if we could get potentially a pullback here. Now, I'm a little bit uncertain on the Canadian dollar. I would lean more bearish just because it's in a trade war with the US. Their economy generally isn't in a great place. So yeah, I think short is the idea, but I'm not really a huge fan of it. So we could see a 50% retracement. I would be quite happy to look to go short actually, and that would be into this low here. This would give us a pretty nice. Actually, I need a bit of a wider stop. So there. So yeah, pretty decent 1 to 2.5. We've also actually, sorry, I forgot to mention, with oil prices rising, it is bolstering the Canadian dollar. So yeah, this short idea actually could be quite good. But yeah, at the moment, I can't enter that. just yet. Let's see if gold goes up or down. Well, I suppose it can only go up or down. Can't go back and forwards, unfortunately. Where'd you place a stop loss? If you placed NASDAQ trade, okay, let's have a look. Okay, so I assume you're talking about a long position here. So be 19,937. So if you were going for that, I would be looking for a full correction back. Stop loss. Depending on your approach, you've got two options. You could either have the stop at this low, below the previous lows, or you could have it a little bit tighter, just below the most recent low. And I think I would go for that option. Yeah, that seems more likely. But to be honest, this entry might be a little bit higher. I can see why you would want it there, because this is sort of previous structure. It makes sense. But if the market comes down to here, I would expect it to come lower and fill this gap, in which case then I would have stops at the lows, down at 19,100 roughly. Target on euro dollar. Short term, I would expect a full correction, to be honest with you. So down to around 1.055. Yeah, so anywhere between 1.05 and 1.055, I would say. And that's just because, again, I'm looking for a correction of this this aggressive upside that we saw. Fundamentally, for sort of the medium term, maybe back up into these previous highs, to be quite honest with you. As I said, I'm more bearish on the dollar now, and the euro is supported. So yeah, I think I would actually position long if we can start seeing prices, if we can start seeing the price come down here. Static days, yeah, it is actually. The markets have been good. They've actually been quite easy to trade recently, but I've kind of changed my strategy recently. So because I'll be honest, the period we're in, I don't really have much clarity. So all I've really been doing is trying to find a macro edge. So just looking to see what is going on, following the trend and just taking a 1%, a 1-to-1 or a 1-to-1.5 and just cutting profits there. And I'll be completely honest with you, it's worked out incredibly well. We're up roughly 9% this month in elite traders from just taking 1-to-1s. But yeah, we'll see how the markets develop. But yeah, it's not my ideal situation right now, or my ideal conditions. Is the white moving average 20? No. So this is a 50, and the blue one is 200. What's that tattoo on your hand? I've got two. So I've got this. Wait, hold on. This one and this one. I'm completely unemployable. Canada's tariff to US, 270% dairy products, 25% US steel and aluminium, 10 to 25% prepared foods, chocolate. Okay. Yo, James, thoughts on dollar Swiss? I would say short-term upside, medium-term downside. And the reason is, as I said, I think the dollar is getting ready for a pullback. But again, it's short term. So long term, I would be actually more inclined to look to go short. So let's just see, where could that be? I quite like this idea. So if we could see price come up again, 50% retracement. In this case, I think I'd have to have my stop at the previous high. I don't really see another option there. I take profit at the fib extension. That would be a very simple 1-to-2. But yeah, this is what I mean. The market is too far down to sell, but it's also just sideways. as far as I'm concerned, I can't do anything here, so I'm stuck. So it's now a case of just letting my trades play out and waiting for new setups. Did I already move my SL to break even? No. The euro dollar trade's actually not mine. It's by the guy that I run the portfolio with, so I don't want to mess with his trade. What about Australian dollar, US dollar? Same thing, although slightly opposite. Well, opposite. So short-term downside, long-term upside. Again, we did have the Australian dollar CPI come out, or the Australian CPI come out slightly lower. I think it was 2.8%, rough, off the top of my head. So that's a little bit of a dampener. Might push the RBA to cut rates a little bit sooner than expected. Maybe. But yeah, I think if we could come down, yeah, I just don't see a setup here, so I'm gonna have to sort of improvise a little bit. But we do have support here, so maybe if we could come down to this level, I might look to go long from there, something like this. Again, very simple, just go for a 1 to 2, nothing too insane there. But again, that's kind of me trying to force a trade in. I don't really see anything else. Thoughts on euro pound longs? I don't like that idea, to be honest with you. I would say the fundamentals lean more towards going long, but I love shorting euro pound. It's pretty much a hobby of mine now. So, I mean, look at this trend here. It's very, very the market behavior is very prone to having strong upside, which you can see repeated strong upside, but we always end up, or well, I say always, typically end up following back down into the trend. And that's what I would expect. It might take some time. Again, we've just had the budget by the UK, which didn't sound very optimistic. We've got lower CPI. So that's not great. Again, the euro is bolstered. So it's difficult really for me to actually say it's short because fundamentals are telling me to long. But yeah, I just don't see anything technically really that would make me buy this market. Actually, let's just see. You know what? I just lied to you. I didn't see this earlier, but we did just hit this 50% fib level and retrace upside or pull back to the upside, which I do quite like. So it would technically lead me more to go towards longs. Excuse me. So yeah, maybe just back into the previous highs. I wouldn't want to hold euro pound too long. Again, it is prone to reverting back to the downside. So it's not a case of I would buy euro pound and just hold it. If I was going to buy it, I would just let it sort of correct previous moves, get to previous structure, and then close out. Hello from Mongolia. Hello from the UK. Look for AUD NZD short setup. I don't need to. I'm already in it. So this is my trade. So I entered, as I always do, I entered off the fib level here. In hindsight, maybe I should have drawn it from here because this one, it pulled back to the 50% level almost perfectly. However, at the time, this seemed like the right place to draw it. And this is one of the problems with tools and indicators are a little bit subjective and you need to use some intuition. However, I think this market will continue down. It is just a matter of time. And again, you know, that's more thinking and just following the trend. But yeah, we'll see. Again, we've got Danske Research that's in a short position. I do actually have some analysis. I've just realized, sorry guys, I completely lost track of time. We've got Chris Pulver coming on the show. So I'll cut my segment here. But yeah, Australian dollar, New Zealand, I'm already short. I would continue in the short, to be honest with you. So guys, have a great one. Again, don't leave. We've got Chris coming to take over the show. I appreciate you all being here with me. As always, you've been great. I will see you all very, very soon. Don't get margin called. See you later.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Give me 1 second here. I'm trying to go live on YouTube. There we go. All right. Happy Wednesday. We are looking at a little bit of a turn lower in the market, just a smidge. Let's go to the daily time frame. Really curious to see how today's candle closes. If we close red with a bit more of a decisive red, maybe even coming back to try to retest that gap from Monday's open, then that looks like a bit of a textbook evening star where you have the bulls making this run with your Friday to Monday surge. You got indecision. And then if today is a bearish decision day, that doesn't look awesome. The bears could certainly use that as momentum to say, hey, look, we had a little peak. The bulls were able to get back to their little pullback zones. If the market's going to run from there, then we could have a gap fill in play by the end of the week. I'm kind of fingers crossed that the market doesn't do too much damage for the remainder of the quarter, just to see if we have some chop in here, and then in April we decide whether the bulls or the bears continue to take it somewhere else. But for right now, the market seems to be declining a little bit. Taking a look here at my tick and advanced decline line. So we are fading on the advanced decline line. We are going lower in tick, and we have like more of a down volume that's growing versus up volume. So SPX is down about 35 points right now, and that gap fill, if it gets a little bit larger, that gap fill is in play. This all changed in real time. So I was noticing there wasn't really much to the downside outside of the 57 or the 56.75 zone, and now this has increased where the bears might be willing to claw back a little bit more. I kind of want to sell a bear call spread, but it just seems like 5,800 is just not that far away if we had like a 50-point move. But let me see what the day looks like. So if I did let me look at I looked at this earlier. I didn't really get the fill that I wanted. So I passed on the trade, but I'm thinking if I were to pin this thing at like 5,800, yeah, I'm just better off doing a bear call spread. 59. If I stagger these, I can get a buck on that trade. If price goes lower, that's going to be a pretty quick dollar to win. If price comes back up at all, this is starting to light up a little bit more. But yeah, I'm curious where the bears are. This put option volume has increased from it was pretty much dead equal at like 30. It was 30% call side, 30% put side. Now it's 60 to 8. So if we do have continuations lower, this market may be coming after that gap from Friday to Monday. So I'm going to give it a little bit more time, just because I took a quick win in SPX this morning. We haven't really had anything bad happen, but I can see like those bears didn't go away. I think you're silly to think that the bears all of a sudden are just completely absent. I even pulled this headline this morning. I think Trump is now in the bandwagon of jawboning the markets. This is certainly a headline that's going to support it. Probably more lenient than reciprocal. So April 2nd, taking away some of that potential uncertainty by like, look, we're willing to negotiate. We're willing to go to the table and figure out what's going to be hopefully mutually beneficial. But this is one headline, and who knows what it looks like later today or tomorrow or maybe on April 2nd. So I'm still just cautious, right? A lot of defense, a lot of closed out trades for winners, watching levels closely. Time is going to help. I'd like to see a Thursday, Friday for this week still hold in there. If Thursday, Friday can hold out with trying to make a high for the week, that would be helpful. So let's do some top down. Let's look at currency strength. Currency strength for today. We have New Zealand and Aussie on top. We got the CAD making a bit of a run. Euros in the middle with the dollar and the Swiss, JPY and pound on the weaker side. Not a ton of volatility on currencies. little bit, but not a ton, 50 and 50. So you're getting maybe about a 100-point move somewhere out there between the pound New Zealand. That's about it. Other than that, pretty contained. We have the markets down slightly. S&P is down about 0.43%. SPY down 0.44. Equal weight, interesting. Equal weight is up. That's a pretty big divergence between S&P. So this has to be a little way on Mag 7 again. Yep. So Mags is down. Let's take a look at those, by the way. So Apple's actually flat on the day. Amazon is down on the day. Broadcom is that's a big one there. So Broadcom is, they crossed $1 trillion. Now they're 861 billion. So Broadcom is down $13 for the last 3 days. That's not a good look. So that's dragging down for it's not technically Mag 7, but they were throwing them in like the Fantastic 8 or whatever the heck they're being called now. Google slightly down in the day. Meta also slightly down in the day. Microsoft slightly down in the day. That one, I don't think I have any trades on Microsoft outside of April. I'm going to hang on to those. Netflix down as well. Yeah, I like Netflix going a little bit lower. I think Netflix, if it heads down, that's good. It's not a Mag 7. It's like one of the old Fangman stocks. But I have a Butterfly up here, and this one was closed out for full profit last week. NVIDIA, pretty big drop in NVIDIA. That gap lower from 120 and change all the way down to an open today at 118 and a sell off towards 115. So NVIDIA not looking awesome. Tesla up to 289, almost 290, and back down to 275. I did a video yesterday on my YouTube channel in the afternoon. I just shared a trade. This is a trade that I took. This is a trade that I kept these shares in assignment from because it was below 255. So I took the shares. I put in a cover call this week at 247.50. I pulled in about $18 of credit. I rolled it yesterday in session for about $2.60. So if by next Friday I could have just kept it and taken the income. But I thought, well, if we stay above like the 247.50 level was still mechanically in a good spot for the option chain for next Friday. So if we stay above 247.50 by next week, I make about $6,000 on Tesla in a 2-week period. It's not bad for a little income flip. And price, I'm curious if we, can kind of spy on Tesla and keep an eye on maybe a bullish pattern. The downside right now is that Tesla is still underneath the 200 moving average. Right? Like that's a tricky spot. So we could be kind of, carving out a low. Maybe there's some type of falling wedge. Maybe it gets worse, right? Maybe this isn't done yet. But there is some pretty interesting news coming out for Tesla. I think there was something with Saudi Arabia. Is that what I read? Market reacted positively to President Trump's hints at delaying auto tariffs, reducing trade concerns. Okay. And then I thought there was something on Saudi Arabia for Tesla that came out this week as well. But anyway, as long as we stay above 247.50, I could care less. It's just an income trade plus this, plus own shares. Berkshire Hathaway still making all-time highs. How is this stock going to find the 200 moving average? I don't know. Warren Buffett probably has to pass away. That's awful to say, but this is a company that's sitting on about 20% of their assets in cash, waiting for a bigger opportunity. What was value plays and they've held on to for a decade is no longer value plays. That's why they were net sellers of Apple. They sold Bank of America. They've obviously rotated around quite a bit. All right. Bonds, TLT is down. Let's see what yields are doing. Are yields back up? Probably. Hey, you know it. 10-year just still sticking around that 4.35. This is why Trump is urging the Fed to cut rates. That's a terrible decision, right? If the Fed is forced to cut rates, the market reacted that way to cutting rates. If we cut rates again and the market sniffs it out thinking it's too soon and there's recession risks, then yields are going to go higher. I think the Fed should do nothing. I really do. I think the Fed would be silly to do to feel pressured to cut early. I mean, right now there's only the next Fed meeting is May. There's not a Fed meeting in April. So if we take a look at the probabilities here, it's still a June. So, I mean, we're still looking at a pause in May. I haven't seen the shift at all, but there's nothing in April. So does it give the market a chance to do something seasonally? Seasonally, the market should be going higher. We typically get through like a little March pullback or February, March pullback, and then middle of March, late March, it picks itself back up, dusts itself off. And then March, April, May, we got a pre-summer push. If it's strong enough, it lasts into the summer, typically going into like July and August. So that's kind of the big question mark where we're at. Are we going to stay above this 200 moving average? And this was probably a big sign of relief for a lot of investors to see that price was able to get back above it. My concern was that we had this pullback right to it, rejection, 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 and then it fades back down. So the fact that we did close above that, that's a good sign. Now we need to see if it will stay there. If it will stay there, stay there, stay there, that's good. Let the bulls and bears duke it out. There's still room to get back to bigger pullback zones, right? We're going to see if those bears want to claw back. So I think this is a spot where be very careful. I don't want to get heavily positioned for one way or the other. My hedges that are in are out to, August and September and out to December for right now. And I don't really feel like I need to have fresh hedges on, not yet, but it's probably going to be somewhat wise to have something maybe for like a 30 to 60 day window, just in case we have another dump. I still think that this is a bear trap area. If this market's going to be resilient this year, and I know I've talked about this, but I really realistically think that if the market does too much damage below this level and we start to get into free fall mode, US goes into recession, drags the global economy down, everything's bad. That's how quickly this whole thing could be like Europe is up and China's up and the US it's going to fight back. Maybe. But if the US drags the global economy down, nothing's going to look good. So I get it. Like the Trump put and the Fed put may be dramatically lower as far as like stepping in and reacting to something. But this is going to do a lot of psychological damage and sentiment damage and real investment damage. If you take a 10% haircut in your 401k or 10% haircut in your portfolio by passive investing or financial planners are getting their asses kicked in the markets, taking another 5 or 10% hit to the downside to have a 20% correction, nobody's going to be happy. Right? And yes, I understand that a 20% correction could ultimately lead to multiple years of getting back to these highs. But if a buy and hold investor is just getting back to all-time highs 2 or 3 years later, that's opportunity cost, right? That's why it's important that you're still investing as this market may be dropping. But I think if we want to have a global economy that is resilient and still growing, and everyone is catching up to the US, I think the US needs to do its part and stay resilient as the global economy can still have that rotation into, Europe is going to be on a major spending spree this year. China's still continuing what they started last fall in September, major spending spree. To kind of put a backstop to the failing markets. So it's a tricky dance, but we'll watch it all unfold. So let's see what happens. All right, what else? Dow is actually up on the day. Good. I bought some shares of the DIA back on this little dip. I've got some 1-on-1 trades that I closed out as well. Let me see if I have any of those left. Let me check on my DIA. I might not have any trades left. Nope, I just have shares. So I closed out. I had a one this trade here. I did a 1-1-1 trade on the DIA. Let me go back to my tracker. Where the heck did my tracker go? There we go. SPY DIA allocation. There it is. It was a 400 by 395 by 390. It was a 425 expiration. I pulled in $2. It was already trading for like $1.60 or $1.70 net profit. So I'm keeping the profit that was closed out. Do I have another one? April 17th. Yep, keeping profit there. Yeah, those were good. Very good. Plus a profit trap on that one, actually. So my $1.37, I closed that one out for a small like profit trap. I think I closed out for $1.50 or $1.60 per contract. All right, so DIA is up. Russell is down slightly. These trades I also closed out this week. I don't even know the number this week. I've closed out probably close to 120 trades for profit this week. I said that de-risking area, that chance to look your portfolio, if the market is allowing you to come back and stay, get out of trouble. And all I was doing is lightening up my risk. It's like I was willing to take on and nibble at some of these downturns, but what I'm trying to avoid is if we're going to go lower, I don't want to be taking on assignments with, kind of some of my lows picked out from these recent levels. So as this market went up. I had a lot of my cycle trades that were in red that now turned green, and I'm taking some of those profits. A lot of them were just talking selling premium or taking in credit. If I have, let's say, I pull in $1 credit on a trade. Okay, so if I have $1 credit on the trade, a lot of my trades I was seeing for I could keep about 70% of that trade, or somewhere even higher, like the 120%, because I have some profit traps built into it. So for most of the trades that I closed out, like well over 100 this last week, anywhere between 70% of what I planned on keeping, or even a bonus profit, I did a lot of that trading this week. So a lot of these pushes have allowed me to do that, and that helped me clear up and go from a this was cash wise, this option buying power and stock buying power. Option buying power was down to about 900K. Now it's up to 1.5 million. So I have freed up a lot of trading power, a lot of option buying power, a lot of stock buying power. I have plenty of cash at the ready. I am just under 50%. So I feel like pretty prepared for if we have another downturn. I have plenty of capital to be deploying. And if we get another jump in the VIX, I have plenty of capital to take advantage of a potential another surge higher in the VIX. I will say this next go around, I will probably take advantage of the SPXY. I didn't do it this time, but I kind of wish I would have. This would have been a nice little purchase right around 44 bucks. Grab a quick like $4 or $5 out of it. That would have been a nice trade. I was looking at just selling puts, which is fine, but I was looking at selling like 400 shares of this, and it was tying up like it doesn't trade like a margin account. So I didn't really feel like I was gonna safely throw $20,000 at it and say, well, that's the bottom, but it was. But I think I'd be better off just buying shares. So I'll look at that if we have another spike up in the VIX. Dollar index is still not making a ton of traction either direction. Still pretty quiet on the volatility side of currencies right now, but I still think the dollar index has a short-term recovery ahead. I look, you can look at this on the 4-hour chart. Okay, I think the 4-hour chart's pretty clean. Couple of levels to watch. If we have a slow pullback into this 200 moving average and then it turns back red, that's a good looking trade with a stop loss above this high or above this trend line, and look and see if you can recapture these lows. So if we can recapture those lows for another trend to the downside, then that should be pretty good. I'm very curious though. The dollar was dropping as the stock market was dropping. So usually they're not correlated like that. Usually if the dollar's weaker, the stock market is stronger. But in this case, the dollar was taking a big beat to the downside as the market was falling. The market bottomed and has rallied a little bit, and the dollar has like softly turned up. So I don't know. I don't know if this is going to be, dollar that plays into the hands of the bears to come back in. Does that next leg lower also yield a lower stock market? It shouldn't, but it might. I don't know. So anyway, this 200 moving average looks pretty good. This whole area is a big inefficiency on the daily time frame. So I'm not going to force a sell trade, but looking for a simple, trend line break. I'd like to see price just pull back a little bit more, try to find some of these inefficiencies and kind of check some of the boxes there, and then look for a turn. Confirm it there, stop loss above, or what I kind of like to do is I nibble at some of these trades. I would take one stab in the trend line break and then see if it pulls back to test the highs, take another stab there, then look for another sell-off, and then put your stop loss above and see if you can take that trade. That way you can kind of average in for like 2 or 3 entries, trade small to do that, but still have a stop loss just above kind of this 106 to 106.50 area. My trading Pfizer, yeah, I've got some trades on Pfizer. Pfizer, I mean, I like it. I don't know why this company will stop making COVID vaccines and start making cancer vaccines. Start making Ozempic. Start making something that people want. I mean, honestly, I hang on to the shares. I've got a diagonal spread out to 2027. Pfizer from the fundamental side is pretty darn good if you ask me. I mean, this is fair market at like a $35 or $40 stock. Checks a lot of boxes. Dividends is not well covered, but still, it's maintained. We've got earnings forecast to grow. We've got trading way below estimated values. On paper, fundamentally, it's still very low price to earnings. And I mean, when fair value is at $70, it's like, okay, well, freaking do something then. Like, I don't know what they have to do. But do something. But compared to its peers, I mean, Johnson & Johnson's at a 27.6 price to earnings multiple. Pfizer's 18 times the earnings. I mean, I look at it as like it's a value play. It's got a solid dividend. It's very low beta, so that's part of the reason I'm in it. I am in it with shares. I'm in it with a diagonal spread. I bought a deep in the money diagonal spread, which looks something like this. I bought a $20 call, and I'm selling the 29. So my 29 is out to May. It's still another 51 days out, but unlikely we're going to get above $29. But if we do, that is about $2,000 in profit, and I've got this on every account. So Pfizer, like last year, I made, I don't know, I think I made like $15,000 on Pfizer last year for the portfolio. I've got it set up to make about $20,000 this year if I get these trades called away. But I'm out far enough. I'm out to summer of 2026. So this is June of 2026. So I'm like, let's go out this year. Let's get through to 2026. Come on, Pfizer. So and plus, I mean, every time it doesn't get called away on the sell side, I'll just sell another like 30 to 60 day call option and just try to like whittle down the debit. But I do like the trades. I own shares of Pfizer, and the dividend's fine. But I would like to see. I mean, this is what I did on the high. Here is a daily time frame. I mean, I just took this recent high to low, and it's like, okay, well, give me a shallow pullback. I could even say there's a bigger target if I go from that all-time high. But recently, like if this is a high, low, lower, high, lower, low, well, okay. Then even if we pull back to $32, $34, great. Make a move, man. So I don't know. Maybe the next earnings catalyst has to be the reason it goes up. Does it get worse? Maybe, but I mean, we're back down to freaking COVID levels. Like, what's up with this? Right? So, all right. Anyway, oil is off the lows just a little bit. I still think oil is going to make lower highs, lower lows. I still think this floor is in jeopardy. Honestly, the next trade in oil for me would be something like this. If oil comes back to the 200 moving average and starts to turn south, I may look at a either a bear call spread, or I might look at an out of the money bear call a bear put. I bet bear put spread here, or a bear call spread out of the money. That makes sense. So if we come back to this resistance zone and we start to sell off, I might look at a slightly out of the money bear call spread and just see if it continues to make lower highs. This floor continues to be tested. If the U.S. wants lower inflation, I think energy is a big part of that, and that would have to be the play. Oil going lower makes energy a lot less sticky in inflation. So your headline inflation, not core inflation, but your headline inflation could read a little bit lower if we have lower energy prices. So I don't have any trades running on oil. I'm still long natural gas. This is also pulling back, but we're still in a buy zone. I mean, natural gas has been up quite a bit above the 200 moving average. I look at this as a potential bullish pattern. If this is a left tip, center tip, and we're coming back in to settle in around this 200 moving average, that'd be another good spot to look at long UNG and see if that heads back up into this structure or some inefficiencies above the 30s. So it looks like my $23 call for April is likely not going to get called away, which would be for around $18. And I'm just going to continue to sell it. And so I'll lower the debit. I'll lower the debit. I'll lower the debit as many times as I can. And hopefully I'm doing that with the price still appreciating. And I can shift this around where I'd like to make, I don't know, a couple $1,000 per account on this if I can. But longer term, I still think natural gas looks pretty good. Gold 30.19. Gold, we have overbought conditions with divergence, and that's pretty obvious. I've been saying this for weeks. Like, I'm not buying gold. I bought gold in this wedge. I bought gold on this pullback. I bought gold in this breakout. I still have long shares of GLD. That's my favorite way to trade gold if you want the spot price. And then when I find option opportunities, I trade gold futures. So what I'm going to look for is, do we have a pullback into some moving averages and then a turn up? Okay, maybe it's a shallow dip. If we pull back to this level of resistance, okay, fine. We pull back to this 200 moving average, which is really what I'm watching. Okay, the SPY hit the 200 moving average. Costco hit the 200 moving average. Walmart hit the 200 moving average. Palantir hit the 200 moving average. Meta hit the 200 moving average. Netflix hit the 200 moving average. Like all those stocks turned. This is a very high bar count as well as a stretch away move. I think gold is going to, and look, it may not make a bearish move to hit the 200 moving average, but we also may go next to nowhere until there's just this monster accumulation zone happening. So I would say patience would be hopefully the best action on gold would be don't force any trades. If the market just consolidates, then another breakout coming could mean more really nice upside. But if we have a correction coming, well, cool. Let's freaking get it. You know, a slide down to this level here that puts in a little topping pattern. Well, I would be eager to buy up some more gold on a corrective measure. So if we go high, low, lower, high, lower, low, sure. Look at that symmetry, plot some more levels, and then it would be options for days. I'd trade GLD options, I'd trade GC options, and I'll add some more shares to my GLD holdings as well. Okay, silver. Silver's hanging in there. So if we compare silver and gold, we're still clinging to this multi-year range. I'm curious if silver actually gets the upper hand. If we break this structure lower, that means that silver would be outperforming. So maybe that happens. Bitcoin, nothing too exciting here. We came up towards around 88,000, pulling back a little bit, but not bad. As long as we stay above 75K. I mean, MicroStrategy's hanging in there at $330, down a decent amount. I mean, from 340 down to 330. But again, do we stay above 310? Do we stay above 300? Do we have just a chop fest in here? Is MicroStrategy going to be doing this? Maybe. Bitcoin is not breaking trend lines. There's no major momentum here. So it looks like Bitcoin is still in a bit of an accumulation phase. Major resistance to hopefully hold as major support. There's also support with this outer trend line. So this is a key level on Bitcoin to hold. If the bulls can hold this area up, then a break of this trend line looks a lot better. But my concern is that if we end up falling through this level, and it's not a bear trap, so if the bulls don't immediately respond with that, if this ends up falling through this level and then falling through this level, and we come down and take out this low, then I think we put in a major top and we're looking at like a 70+% pullback on Bitcoin. That would be unpleasant for most of the ETF buyers out there that have enjoyed, hey, this thing finally went live. I can trade it my typical stock account. My financial advisor saying I should have 1% exposure in Bitcoin, whatever. But they've been rewarded very well for that. Having that little exposure in Bitcoin, they get a run right there and a run right there. So if all of a sudden that is going down by 70%, that's going to feel like crap to watch all these profits fade aggressively. Not that people are going to dump the position, but I think Bitcoin is still a very good barometer for risk appetite. So if we can hold this area, and we can make a run, that's an encouraging sign to maybe get back to the all-time highs or possibly have another swing higher. We will find out. Coinbase. Well, I do want to watch this one closely. So I do have some positions. Let me check on this one right now. So this is by Friday. Looks like I have Coinbase. Okay, so I closed out, this one closed out for profit. $1.07, I closed it out for, I think I was up like $110, $120. So I got a little bonus trap on that one. Let me check my positions. So Coinbase, this one's out to April. Max profit's 225. I'm already up 66% of that trade. This one's April, same thing. This one is April, same thing. This one is an IRA account, no exposure there. This one, IRA account, no exposure there. This one, nope. This one, corporate account, no. This one does. This is April, up about $155. This one is, I closed out for profit. Let me check on this one really quickly. So this history for coin. We go year to date. What? No trade on coin? Okay, let's go this account. Okay, so for some of those ratio spreads and income, there's $515 over 2 trades. So it was this trade for profit. This trade is still running for profit. Overall, closed out for about $500. That's fine. The nice thing is this was the trade where by Friday, if we were, well, it would have been nice to have a little bit more profit trap, because it's possible that if we're right at 195, I don't have assignment, but I still have a $5 profit trap. This could have been maxed out about a $600 trade. I still took profit on it. It's still fine. I made $500. It's fine. But this trade is still looking good because the strikes are lower. So now the only trades I have running for Coinbase, for all coin, it's April. They're all 111s for April. It's currently up around $619. The strike that I'd be worried about would be the 155, which means that Coinbase would have to drop. We'd have to drop another 21% on Coinbase for that trade to be threatened. So over the next 20 days or so, that's probably not likely, but let me check for 22 days out. That's pre-earnings, by the way. So this is trading at like an 8 delta. I mean, the probability of that getting a sign is very slim. So I still like the trade to pull in full profit. That should be worth hopefully about $1,000 on that trade. Okay, that's Coinbase. Ethereum, if it doesn't break the trend line, stay out of it. Copper just surged to all-time highs. Do watch copper. This is not the spot that I want to say, hey, let's buy copper at all-time highs. No, thank you. But I will say we need to have a pullback. I mean, that's an interesting rejection candle. So copper maybe have made a nice little surge. Look at this kind of 1, 2, 3, 4, 5. Don't be surprised if copper puts in a bit of a top. 1, 2, 3, 4, 5. We're probably going to have an ABC correction. So if that correction plays out, let's say high to low, lower high to lower low, usually it's coming back to this area or this area, which means if we have copper entering into this zone again, I wouldn't mind looking long. If you want to take a gutsy play, that would be looking to get bearish on copper to essentially call the top. Probably not what I want to do right now, because we're at all-time highs. That momentum could still be surging higher. I'm not calling the top here. But if we have a correction, that's cool. Play out correction and then look for higher lows. Okay, Japanese yen, nothing there. I'm out of this trade for profit. Nikkei, EWJ, still hanging into some profits. DXJ, German DAX, sideways. Fez just sold some premium on this one. FTSE, just good dynamic support on the 200 moving average and dynamic EMAs. Nothing crazy. I'm not buying FTSE or anything, but it still looks postured pretty well. I like Europe better. Actually, I like the Euro stocks better. I like this is FEZ for Euro stocks. This is the DAX. Argentina didn't quite pull back to the 200. I'm waiting for an opportunity to buy it. I may not get it. China slightly down, but China is kind of a volatile, but still making higher highs and higher lows. So, I mean, does it give us something like this where it's going higher, pulling back, higher, pulling back, higher, pulling back again? I mean, China might also offer the markets another opportunity to get long. So I'd say just be patient. Brazil, I'd love to see Brazil. This is EWZ above the 200 moving average. See if we can break this trend line and get into a buy zone for the first time since January 2024. This has not been in a buy zone. This is also a large range. I mean, I would be really happy to see the shares that I own of EWZ getting back to 35 or potentially, $40 to $45. That's going to have to be a big emerging market push. That's going to be a big commodity push. That could be something that's non-US based as well. I mean, it's a value play. It's nobody likes Brazil. So it's cheap enough. It's at 2015, 2016 lows. It's at COVID lows. I'm taking a stab. Okay, we did Bitcoin, Alexander. As long as it stays above 75, it's accumulation. ILF, this is LATAM. This is Latin America. I took another stab at this one. I added some shares. MAGS, like I talked about earlier, MAGS is down. We'll see. We're sitting right at the 200 moving average, coming into the quarter. I mean, from just a simple fibs from high to low, The 30%, 38%, 50%, I mean, there's still some pullback zones if mags get a lift. If anybody is cheering on the markets in general, if you think, man, I want the S&P to go higher, I want the NASDAQ to go higher, you better hope that mags goes higher too. I don't think that 493 stocks are enough to go up and have the Mag 7 go down and see this market go higher. There's still way too much market cap. They're still way too big. And granted, investors are trimming Mag 7 positions and they're trying to get the allocation, back down to more reasonable levels. But 493 stocks, you'd think like could help the market. It can build some resiliency into the market. But if Mag 7 is going down, it's going to drag the market lower. So maybe the best case scenario is Mag 7 just remains resilient, okay? And 493 stocks can show some signs of growth. But if Mag 7 goes back up, the market's going to respond probably favorably. So if you want higher prices in NASDAQ, you want higher prices in the S&P, you probably want to see Mags go up too. Okay, so Peter's asking about the NAS. Watch Mag 7. Right now, if I'm looking at my stocks above the 200-day or the 50-day moving average here for the NASDAQ, we're only sitting about 33% of stocks above the 50-day moving average. I think there's a great timing indicator if we have another opportunity to buy the NASDAQ cheaper or at lows where it's like everything in the NASDAQ is down, where it just looks like a bargain. That's where I would want to get long the NASDAQ, is if we came down to these like really like bottom of the barrel levels, and I'd say, okay, I'm going to take a stab at the Qs. So I don't think that the low is necessarily in. Or that maybe the broader move is like, okay, Mag 7 is resilient, it keeps the Qs elevated, but the 90 stocks, 93 stocks in the Qs are going to continue to tread water. Because remember, the market moved aggressively away from growth and momentum early this year. Did it not? Like, that was a heavy dump of momentum, heavy dump of growth, heavy dump of deleveraging. And that's what this big decline was. You can throw tariffs on top of that and say that's what ruined the sentiment, that's what soured the mood, but the rotation was already underway. It was needed to happen. The corrections needed to happen. So a lot of it was the forced rotation into rebalancing portfolios, taking profits. And once we saw the scare of, tariffs potentially increasing inflation, slowing growth, all of a sudden people are throwing the word out stagflation. Well, then growth is done, momentum is done, and it got beat up so badly that I think there's a good buying opportunity if it comes back to these like really good bargain levels. So anytime I see this, this is NDFI for the NASDAQ 100 above the 50-day. Anytime I see this thing in the low, like double digits, like 12, 11, 10, it's been a beautiful timing indicator to get long. Now in the context of where we might be, just be careful on this. If we go back to 2022, okay, this 2022 was a slide, 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 slide. So getting long here just gave you that. Getting long here just gave you that. Getting long here just gave you that. So tactically speaking, if it's a timing indicator, remember, if we're making lower highs and lower lows, this timing might be time to buy. So I wouldn't say this is going to like all-time highs. I'm just saying be tactical, like be kind of quick to some of these trades if it gives you a timing indicator, because all these that we had back in 2022 were, 8 to 10% rallies. This was a 15 to 17% slide and then an 8 to 10% rally, another cut to the downside, another 8 to 10% rally, and it did that multiple times. So there is good timing, but in the context of the market, just remember, maybe good to take some profit along the way. Okay. All right. Other stocks, Costco, tap the 200 moving average. I'd love to see if Costco, two things, either Costco splits. I'm just not interested in the stock at $930. I did a bear call spread. I did a bear put spread. I did broke wing butterflies. All those paid out really nicely. I do want to consider a 111, but I don't really want to own the shares at freaking $700. I love Costco, but not enough to say that I want to own it with 100 shares in my portfolio, tying up a ton of money. So I would say this: I'd love to see Costco split. If they want more buy-in, it's like I know it sucks, like you water down the stock price, but it just gives holders more stock, which is fine. Which I have some fractional shares of Costco. Not enough to control the options that I want, but it's a decent chunk position. It's a whatever, 5 or 10 grand. But if they split like a 5 for 1 or 10 for 1, then you set it, forget it. Like I would buy Costco at $90. If it splits 10 to 1, I would buy it $90 and I would never worry about it. And I think this stock is going to continue to be one of the biggest retailers in the world with some of the most loyal members. And it's a good stock. It's still trading at a high multiple, really high multiple. So, I mean, fair value on Costco. It's pretty much fair value right now with the decline. So we're trading at 54 times earnings for a grocery store. I know it's more than a grocery store. I get it. But that is ridiculous. That's the same reason Walmart dumped. It's like these are high multiples for, essentials. And I get it. If anyone is a member of Costco, you know what I'm talking about. You go in, I've not gone to a Costco in probably 2 years. I hate going to the store because I never just buy what I need. I always get like, oh, that's cool. That's how blah, blah, waste money. Anyway, we're at fair market value. So cool. But does that mean I want to buy it now? No. I want to split so I can trade some options at a much cheaper price and I can own it where I want to, similar to what it did on Chipotle. Chipotle was a $1,000 stock and it split. And so I started doing ratio spreads and other things at $35, $40, $45. Gladly would take on shares. I never got assigned a single stock. I just took a bunch of income trades on CMG. So I mean, I don't know. I don't know if they're going to split. Maybe they do, maybe they don't. But still, it's very high price to earnings. And I would like to see maybe this. If it's a high, low, lower, high, lower, low, maybe I'll take a nibble there. What I did do was, as far as retailers go, I did take this trade on Target. I did a ratio spread, and I put this all the way down into the 80s, I believe. So I did a ratio spread on Target right here. I did a ratio spread, pulled in $1.74 credit. Let me put this one here. So group ratio spread. So I pulled in $1.74 for income. I would be willing to own the retailer at a monster discount. I'd own it at like $69 or $68 if I did take any ownership. But I mean, that's one like very beat up retailer. I also threw in more puts on Nike. It's just a brand, but their earnings were okay, but they still went lower in price. So I ended up doing a 55.50 and 47.50 put combo out to the rest of this year. Oops. And if it stays above, I'll take shares of Nike. I don't really want to because I collected $5 of credit. Like, yeah, give me $500 on Nike without owning a single share. Okay, Home Depot. Home Depot and Lowe's, I think there's good buying opportunities if they are coming back down to these major support levels from 2022. Same thing here on Lowe's. Come back to some major support. MasterCard, Amex. Ooh, I'm going to check in this one real quick. Amex might be looking good for some profit. Amex is ratio spread for April is up 91 cents. It's up 81. I'm up 90% of that profit. I'm just going to go ahead and take it as long as I can get out of here for like a 10-cent debit. I don't want to pay more than that. So let me see if I can get out of here for like 10 cents. 15 cents. You freaking turds. I guess I'll wait. I'm $20 safe. Let me see what the April 17th 260 looks like. April 17th 260 is now trading at a 17 delta. So I have about an 80%, 83% chance it stays out of the money, which is good. Honestly, I should probably just take, I don't want to take the profit. Possibly better. Let me see. Amex. I mean, it's not a bad spot to take the profit. Lows around 255. My ratio spread was a 270 by 260. The nice thing is I would actually own the shares around $250 or less because I have the 270 by 260. That's a 10 wide. So I would have a 260 assignment minus $10 minus the 280 credit to own this at like 247, which is quite a bit lower. So anyway, I just think that if I want to take the profit on this one, I could. If I want to go to May, it's probably fine. I just need more time in this one. But I'm up about 90% of my credit right now for this ratio spread, and that's okay, right? Like I'm up. Let me see if I can close this one down. There we go. Let me put in a 5-cent debit. As long as if it's like 10 cents or less, what I pull in, 91. So as long as it's less than 10 cents debit, I'll take the trade. 5 cents, 6 cents, 7 cents, 7 cents. All right, so I'm getting out of that trade. That's a winner on Amex, AXP. It's a ratio spread. Let me see if these other positions have it, and then I will take a few more last requests and then let you go. This account, AXP, ratio spread, close this one out for a, this shows a credit. I'll go 6 cents debit, 7 cents debit. $0.07. Amex here, no. This one will have it. Let me label this ratio real quick. Okay, so this trade closing for a 7 cents debit. Come on. 6 cents debit, even better. Next, no. All right, Amex closed out. Very good. So Amex closes out, and then I still have a May expiration that if we get seasonality, probably won't have assignment on that one either. But if I take the assignment, I'm willing to own the shares and see if there's some resiliency built into this. I will just work the cost basis lower. So not a bad play. Johnson & Johnson still had puts on this one. Progressive off the highs, took a ratio spread for profit. CB, this one's good out to May. Palantir, still ratio spreads for April. Carvana, no trade. Salesforce, no trade. O'Reilly, the little creepy fucking brick and mortar retailer that you want to buy windshield wipers and brake pads, and this thing's at $1,379. I don't understand how this thing is so amazing, but ORLY. I mean, I've seen better snowflake analysis. I don't know, man. This is a wild stock. 33 times earnings. Current price fair value. It's like, man, if the premiums were good, I'd love to sell the crap out of this thing. Let's look. ORLY. IV's going to be low. I don't know, maybe. I could be barking up the wrong tree here, though, if I'm trying to sell this thing. But we have earnings on the 23rd. So I can do a pre-earnings play out 22 days. That's not a lot. Let me see what a, I don't know. This is going to be interesting. If I do a, bull call spread, and then that's not a bad trade to me. So I have a bull call spread and a 22 delta sell. 1460 is 20 out there. That's a 15 delta now. Like that trade might be okay pre-earnings. So what's my 1460? $14.60. Can we go another 5.9% higher over? I mean, the daily chart shows overbought with some divergence. We don't have like a crazy high bar count. Man, it's been a long time since I hit that yearly moving average, though. Since 20, wow, this has been that's impressive. It has not hit this 5-period yearly moving average for since COVID. It's crazy. Anyway, I don't know if that's the smartest trade, but I think it'd be pretty easy to make. I mean, that's pretty compelling to make like $500. That's a 20 delta, though. Maybe I can shift this once. It's not really any better. That one's okay. A little bit better. Okay. This might not be a bad play. Let me see what this looks like on a portfolio margin account. Fudge, man. Really? This is a portfolio margin account, which should be about a third of the buying power, and this is reducing by 12 grand. I'm not going to take that trade. I can put a spread on. That's a little bit better. But now, I mean, I don't know. Again, like you play with the options, it just doesn't quite set up the structure that I want. Now there's risk on the trade. I can't really roll it like I could if I wanted to. Plus, if I rolled it, I'm running into earnings on the 23rd for the April 17th expiration. Just for fun, I'm going to just look at this trade hypothetically. So a 1430 by 1440 by 1460. So 417, 1430 by 1440 by 1460. 111 calls. So basically what that trade would look like would be, if I take the trade, it looks something like this. You have price at 1379. If price goes down and I collect, let's say $500 on the trade, or what was that? What was that trade if I took it? Collect it, yeah, $4.10. So it's $400 of credit. What that looks like is I keep the $400 of credit. If we get to 1430, we start to go up. We get to 1440, we have a profit trap. We get to 1460, then we start to get a little bit more risk. But I have a $10 profit trap in here in addition to my 410 credit. So my max profit in this trade could be $1,400 or it'd be like 1410. Now the risk is going to look like that because it's undefined. So if somehow this stock just goes gangbusters, like, I'm in some trouble. But what's nuts is I took this on an option position and it's requiring full buying power for the trade. I don't know why. But anyway, I'll label it here. If it was a normal portfolio margin buying power like $2,000 to $3,000, I'd take the trade. But when it's $11,000 or $12,000, I'm not going to take that trade. So anyway, whatever. It's low. It's hypothetical. Hypothetical because buy power is awful. Meaning the requirement to take this trade is, I'll put buy power requirement is awful. But pretty sure by 417 we shouldn't get above 1460. So that could be a $400 trade that'd be nice to have, but not going to take it. All right, euro dollar, gold. I mean, we did all this stuff. Euro dollar is looking at the DXY upside down, right? So if dollar index goes higher, then look for a pullback and sell a euro dollar. Same thing. It's the inverse. So euro dollar, if we go 4 hours, look to see if this 200 moving average on the 4-hour chart pulls back. If we have a trend line break, euro dollar sells into this area, look for a break. I wouldn't mind getting trade 1. If it pulls back again, trade 2. Look to see if we have a trend resumption. I like the 111 to 112 profit target. That's just dollar index has to cooperate. If dollar index is going to pull back and then go lower for fresh lows, euro dollar is probably going to be the best beneficiary of that because it is the biggest correlation to the DXY. Okay, and then gold, I spent a lot of time on gold. I'm just looking for a pullback. I think we'll get one. We got a lot of bar counts on the daily time frame plus overbought conditions. I already have a gold futures trade that's in profit. So this one is, and did it close out? It did close out. Nice. So gold closed out. So that one closed out at a 5-cent credit, I believe. Let me double check my history here. So closed out for $105. Okay, go to this account, GC, traded for a little bit of a profit trap. That's a good thing. I should be able to grab a credit out of this one. So I pulled in $1.20. It's trading now for $1.50 or so. Sweet. I'll take see if I get like 20 to 30 cents credit out of this. 30 cents credit, 20 cents credit. Cool. So that was $1.40 for that trade. Any GC here, GC here. I think it's just in this other PM account. There it is. 1, 2, 3, 4. Close it out for a 20-cent credit. Perfect. So $1.40 on gold. That trade, I'm going to close this one out. This is entry $1.20 credit, closed for 20 cents credit. Bonus profit, so net $1.40 per contract. Okay, closing out in pulver alerts. All right, any final requests? I'm gonna wrap up here in just a minute. This trade is in the futures section. So that is an update here. Trade management update. GC entry $1.20 credit, closed 20 cents credit for a bonus profit, $1.40 net profit per contract. Cool. All right, well, chart alarms here don't really matter because I got the trade that I wanted. Now I'm just waiting for dips and pullbacks to buy some more. So this was initially the trade that I'd set up. I don't remember what workspace I had it on, but I had a profit trap between 30.90 and 32.50, but now it doesn't apply because I just took the trade off. So I will free up my alerts and see what happens to gold. Okay, we're good on dollar index. We're good on gold. Looked at euro dollar. Somebody's asking, why is US 30 so choppy today? I mean, price is just chill. It's fine. What do you want? You know, I mean, honestly, I mean, if everyone's like, I want more direction, well, then that's probably the direction you're going to get. So if you're not prepared for that, you're not going to have any fun. I'm totally fine with this. This little downturn here, I had a nice little stretch of day trades that were, I'm 34 for 35 right now on some of these day trades. So I don't mind just trading the market as is and not really having to deal with, that's no fun. I mean, I don't care. This to me is a trader's market. I'm selling premium when the opportunity is there. I've taken a lot of profit over the last couple of weeks, and that's a good thing. And I obviously want to be continuing to position for what is the best trade for 2025, but I don't know what that is. You know, I don't know if this market is capable of doing significant damage to these lows, or if we're going to be in this chop fest for the next several months. Like maybe this market can just grind through a summer seasonality where it's a little bit higher, but it struggles to get all the highs, taken out. And then we come into, April, August, September, and the market falls again. Like this market might have put in like a high and low for the year, and somehow it's just going to somewhat be break even or positive. Nobody knows. But the bear side was a little bit overshot. We'd have to have like a real risk to go lower. Like we'd have to have, Doge has to come out more with chainsaws. Trump's tariffs going to have to get worse. The Fed's going to have to do something silly. The market's going to have to break in some capacity. I don't know. But it was scary sentiment, but we didn't get the follow through. Okay. Hey, does somebody want to see GameStop? GameStop is announcing that they want to put Bitcoin on the balance sheet. So their stock is up. I took a trade on GameStop with earnings, and that was their big reveal. So I've got a trade on GameStop, which right now is up some profit. GameStop. So 270, I can max out here for about $230. So on the call side, I've got $5.50, which would be kind of nice. That would give me 550 of max minus 270. So I make 550 minus 270. So I make $280 on the trade if it goes well. We're already, let me see if $31 is achievable by April. Right now, yeah. I mean, so now my $30 to $31 strikes could be, trading at the money, that's kind of a good sign. So if there's more encouragement, I could just take the profit now, but there's more encouragement, like let's get a surge here. Let's see if we can cross 30, 31, get through the expected move. Let's have a big mover. From the earnings print to current, opened up around 7% higher. Average move is around 17%, and it did hit. So based on what I expected for earnings, we did hit that expected move. So probably the safest thing would be just to take the profit and not worry about it. If I want to get greedy, I want to see if this goes higher and really starts to run. So I think to be on the safe side, I'm just going to take the profit. If I take $50, that's a tiny little win. I'm going to see if it'll push a little bit more. Okay, anyway, it's up. That's good. So earnings, you just can't make any money, can you, GameStop? I mean, I bought my PlayStation 5 from you. 14% pre-market after the company revealed plans to invest in Bitcoin and reported higher fourth quarter earnings. Well, that's great. What happens if Bitcoin goes down? It's a worthless plan if Bitcoin goes down. So we'll see. If there's any more momentum here, or we finish out the quarter strong, I don't know. Let me see what this is trading for again. I hate just to take the profit, but it might be worth it. Let me see if I get 320. Maybe I could sneak in a little bit more on the mid price. 325 not filling. 320 not filling. All right, I'll cancel it. I'll keep an eye on that one. But I do have a trade run on GameStop. I'm going to see if we can get to. Let me see if we can get about $30. All right, I'll keep an eye on that. All right, I'm going to let you go for today. See you tomorrow. Thanks, bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below, or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.